right, welcome everybody. A great morning in Abu Dhabi. It is an incredible pleasure to be here with such a fantastic panel. Thank you, Abu Dhabi Finance Week, for inviting us. My name is Dr. Ruth Wandhöfer, and I have the pleasure of moderating this session from open finance to digital assets. I'd like to hand over to the first panelist just to give a very brief introduction of yourself and your background to this topic. Paul, thank you.
Sure, thank you very much. And my name is Paul Kairouz. I look after the FinTech office at the Central Bank of the UAE. Basically, the FinTech office is responsible for all the FinTech initiatives, from open finance to digital assets, buy now, pay later, and anything within the payment or critical financial market infrastructure. And this is what we're trying to do, to position the UAE as a top 5 FinTech hub in the world.
Excellent. Peter.
I'm Peter Kerstens from the European Commission's Financial Services Department, and I guess that my claim to fame is that I chair the European Commission's FinTech Task Force, which led to our digital finance strategy, which is regulatory frameworks like the Markets in Crypto Assets Regulation, the Digital Operational Resilience Act, or the Financial Data Act, which is currently going through the process.
Brian.
Thank you. So my name is Brian Biagaba, and I head the FinTech team within the FSRA. My role has really been and continues to be wearing 2 hats. One is very much regulation focused, enhancing the rules that we have in the center. So we'll talk about some of the enhancements that we've been making more recently. Also supporting the authorization and licensing activities of firms that are coming in from a technology perspective, infrastructure assessments, and supervising firms that are in the center. The other aspect is really very much innovation, and that's really listening into the industry and tapping into that pulse of what is changing, where is the tide going, how are the kind of conversations coming into new business models, and that's what I distill internally. Thank you.
Excellent. Right, to set a little bit the background here, it all started many years ago with open banking, didn't it? And I recall those days. Many years ago, we built in Europe the Single Euro Payments Area. We created a type of faster payment in the UK and now rolled out across Europe. And then we said we need more competition in the payments world initially, which was dominated by banks. So we had the first regulatory regime around payment services. I remember negotiating PSD1 in 2005, as long ago as that. But all of this accelerated over the years with FinTech innovation coming to the fore. After the financial crisis, lots more competition from the non-bank sector. And I think we are at a point where, having introduced open banking, particularly in Europe, with a regulatory regime to drive the innovation, we still see that it's slow in the uptake, even though payments should be a no-brainer, moving away from cards to account-to-account transactions, enabling data sharing across the economy to get more competition in other services, initially financial services at large, but frankly, being able to share any data for any particular purpose, potentially via your bank or payment provider, is sort of the dream of open banking, and we haven't realized that dream yet. Now we're talking here about open finance, potentially moving to digital assets. We see a lot of innovation acceleration, and particularly here in the UAE, we see that potential of creating it with the dynamic of FinTech innovation plus regulation. But maybe just going first to Peter around our old world experience. Open banking hasn't really taken off yet, but we have some enabling pieces again, also with regulation going forward. What is your prediction to actually get this more off the ground first?
Well, much to my and our surprise, it looks like we really have to nudge the industry into open finance. And when I talk about open finance, it's really expanding the ideas from payments to all financial verticals, insurance, securities, whatever. And this is based on the idea that in the current day and age, well, no, let me take a step back. Finance used to be about money. Historically, finance was all about money. But in the current day and age, finance is more about data and technology than it is about money. If you do not have data, you can't compete. You can't provide services. What we see is that incumbent financial institutions are sitting on vast amounts of data, their customer data, which they don't really use. This data is one of the customer's most important assets, and we want the customer to be in control of their own data so they can have their data shared with other providers who need that data, innovators who need that data in order to provide innovative services. But if you look as a financial institution at data sharing as a compliance issue, it's a losing proposition. There's nothing in it for you. But if you look at data sharing as an opportunity, a business opportunity, you think of a new ecosystem, a data-based ecosystem, which is going to drive competition. And that's what we expect that will happen. It's slow in uptake, but we'll see once it's there and people get used to it, as we saw, for example, in the UK, that incumbent institutions turn around from saying, well, we now have to share data into, oh, we now can get data and we can build on that.
I think you're making a super important point, because we really moved from an economy where finance was at the middle and all the financial regulation of entities and services was there, very clearly defined, to a world which is driven by data, and the data sits somewhere else. It doesn't necessarily sit with the financial institutions. They have a lot, but they haven't very good management around it. So this shift into a data economy also requires how we as users are able to engage with it. Until today, our data is often taken. We don't know who has it, for which purpose. So bringing back general data privacy protection, consent and control is another important element for the user, so that the user can actually use their data for particular benefits, as opposed to having it all divulged in one go, right? But maybe moving to Brian to look at how the UAE and Abu Dhabi is looking at this open finance opportunity. Tell us a little bit about this framework, which really was published this year, which is very comprehensive, and it certainly is more comprehensive than the European approach we've seen so far.
Yeah. Certainly, Paul from the central bank will talk about what was published this year. We've had a framework that's been in place now for the last 2 years.
Yeah.
And I think you sort of look at finance in general, and to Peter's point, you had the conversation around money, but it's also been one of convergence. You think about payments, you think about investment products, you think about the experience that someone has now from a financial service provider is one that is abstracting away all these different parts
Silos,
and making it very, very seamless. Now, open finance facilitates that, it fosters that. And when we set out the framework back in 2022, we started to see some of that innovation come into ABGM. We've seen a couple of, some of the firms that have actually established themselves with a presence and expanded across the UAE. They've actually now started to take on additional licenses from the central bank. And we see that that's something that started from a very nascent position of them being able to say, it's not driven by a regulatory push, but it's actually by an industry demand for innovation. And naturally, that industry demand is because there is a client on the other side who is looking for this convenience. And so the framework we've had has facilitated that, and we believe that we can see that open finance is, again, just one of those areas where making that more equitable in terms of the access to this data that Peter was referring to significantly improves the experience and pricing that clients would have. And we expect that as more firms come into the center and lean into the regulation that Paul will talk about from the central bank, that will give a much more cohesive open finance experience across the UAE.
Great. So in terms of the evolution to the next framework, you also have now the instant payment platform, which is a key enabler of this. So Paul, tell us about how this is all coming together now.
Yeah, it's a very good point. But let me start by saying, when we at the central bank looked at open finance, we wanted to start from where everyone ended, but more importantly, we wanted to do something new. So the way we look at open finance, and one of the lessons learned actually, is that if you try to mandate this and make it as a compliance exercise, it will fail.
Yeah.
So that's why innovation is at the heart of what we do. And we've designed our open finance framework to allow for innovation. The way we would like to call it is this is 3 wins. It has to be a win for the fintechs, win for the consumer, and win for the banks. If, again, you make it a compliance exercise, it's going to become very, very difficult to make it, you make it a big win. Number 2, and more importantly, we wanted to navigate the entire economy and steer it towards the digital economy, toward an economy where you have open data, open insurance, open healthcare. And we think open finance is the best segue to move into an open data economy. And so we created a very comprehensive framework that goes beyond payment. It involves also insurance, and then soon enough, we will also involve capital market product. Now, this sits very well with what we've been doing on the other side, with one of our critical financial market infrastructure, the instant payment platform, or what we call ANI in the UAE. And ANI, the instant payment platform, allow you to initiate and settle payments instantaneously in the UAE. So both the Open Finance framework and ANI, they work together. You could initiate a transaction on the Open Finance platform and then settle it instantaneously on ANI.
And Peter, I mean, we've seen this in Europe, right? We started with, first of all, harmonizing the payment system. Now we're rolling out SEPA instant regulation for next year. We have the infrastructures, but not everybody's yet using them the way they should. And we feel in Europe we always had to push harder on the regulatory side, while here it's much more about the competition enablement and the innovation. So what I find exciting about the UAE and Abu Dhabi in particular is that you're actually taking all the best practices, but you have this energy to create something new that is more commercial and more adopted by every user. Peter, walk us through a little bit what the Commission is now doing as a next iteration to get the market up in terms of digital assets, operational resilience, SEPA Instant, because you have lots of regulatory initiatives that are still to converge, right?
Well, if you look at financial services policy and regulation, traditionally, it really is about economic and financial risk, market risk, counterparty risk, and these things. And economists rule that world. Because of digitalization, as I said, the role of data and technology becomes center stage in finance. And what we have been doing in the last couple of years is to really, is a coming of age of technology and data in financial services policy. So the Digital Operational Resilience Act, which is about cybersecurity in the financial sector. And interestingly, the data show that the financial sector is the largest IT sector in the economy all over the world. 1/5 of all the expenditure on ICT is in the financial sector. The financial sector is the sector which is most under attack by cyber threats. So to really bring operational risk and operational resilience center stage and make it as important in the boardroom of financial institutions as economic and market risk is. And Ruja, I know you advise boards of financial institutions, and boards of financial institutions often are full of bankers. Bankers are not operations people. They don't like technology. They don't know where it is. The technology is run from some basement somewhere else, another building, and so on. And we said, no, this is so crucial for the financial institution that it has to become a boardroom responsibility. Technology, crypto assets, digital assets. The digitalization of assets is absolutely essential. Blockchain technology. I'm personally convinced that if we had no financial market infrastructure at all today, and people around here in the room were told, go and build a financial market infrastructure from scratch, they would build it on a distributed ledger. There is no doubt about that, because the current infrastructures which we have, where every institution has its own ledger, leads to great inefficiencies. Because what are these financial institutions doing all day long? They're trading, serving customers, but they're spending huge amount of money on reconciling and confirming and reconfirming trades to each other. Highly inefficient, very costly, settlement times take forever. And so if you re-platform this on distributed ledger technology, you have huge efficiency gains. And you can also basically put any asset, real-world asset, a financial asset, a native asset on a distributed ledger and financialize it, transact it. So that is about digital assets. And then Open Finance, the Financial Data Act, is to expand the approach which we have for payments, where we, because of competition reasons, forced payment institutions and banks to open up their payment account data to others. We're currently expanding this to all the other financial verticals, so that if you have, say, a brokerage account, an investment account with an investment firm or with a broker, that firm will be required, if under your consent, to share the data with others. If you have insurance policies, and everyone has insurance policies, your insurance company will be required to share data on your policies with others with your approval. So we're really putting the customer in control, in charge of his or her own data and data destiny. And we think that this, on the one hand, does indeed, it will shake up traditional finance, because it will force them to contend with competition from innovators. Now they don't have to compete because the customers are very sticky. The customers don't go anywhere. So, and because customers aren't mobile, companies don't really provide the best service, because once the customer is your customer, he or she rarely leaves. With the customer in control of his or own data and allowing them to share their data with other providers, financial firms are going to face more competition. And that's a good thing, because it'll wake them up. We don't want financial institutions to go out of business. We don't want them to lose out. We want them to really enter the 21st century and to become data-driven companies, because we're living in a data economy.
So maybe, Paul, in terms of that innovation potential that you're creating here, do you see the mindset being quite different in the UAE in terms of the willingness to share because you're getting data back, which is all about making the data work better across the economy, but also in terms of the infrastructure? I mean, having been involved in building payment systems and the regulation around it for decades now, how you are approaching your infrastructure with those additional data highways that have to be secure, they have to be cyber resilient. I think that is the most critical piece that we all look at as an industry, really. How do you create this excitement of innovation potential and maybe let fintechs and other providers participate in a co-creative approach? Just to like to hear more, and when is it happening, right, given the framework is out this year?
Sure. So the regulation has been out a couple of months ago. What we're currently doing is we're building a platform, an open finance platform, that will also go live either by the end of this year or early next year at the latest. What's very interesting about our model is that we've learned from other countries' mistakes and experiences. And so we've seen lots of friction and lots of fragmentation across Europe, across other countries when it comes to open banking and when it comes to fintechs connecting with banks. And therefore, we came up with an idea to build a more centralized API platform that makes it easier on fintechs that are licensed by the central bank to connect to banks through the central API hub. And so we're providing the infrastructure, the pipes, if you will. And again, to avoid all this friction, all of this fragmentation issue that we've seen in other countries, and then allow these fintechs to share data in a very secure, in a seamless way. And what we want now is that we want the industry to come and build on top of what we've done. So the role at the central bank is to build the infrastructure, we build the rails, and then we invite the banks, the fintechs, and even the technology companies to come and build applications, products, and services on top of what we're doing. And we think we have a one of its kind open finance platform. It doesn't exist anywhere in the world. I think time will tell if we're going to be successful. Of course, we think we're going to be very successful. But it's a very unique open finance platform that you won't see anywhere else.
Yeah, which is amazing. I mean, I remember the standardization was the biggest problem across Europe, UK. UK did standardize, which made it the most open banking advanced market, but still only 10 billion transactions a year, which is nothing compared to everything else. Whilst in Europe, we are seeing very slow conversion. And again, we had to put regulatory measures in place to harmonize things that went off on a tangent. So doing it in the straightforward way with enough harmonization at the core is really critical. So I think that's amazing. Now, Brian, when we think about, I guess, the policy framework, the supervision, and also the institutional landscape, do you see different actors now coming to this market, being attracted by the innovation potential that's created here?
Yeah, no, I think that's a good question on two fronts. One is how our framework has shaped up over that period. So the digital assets framework that we have in place came out in 2018. It was one of the comprehensive, one of the first in the world in this regard. And at the same time, at that point, the nature of the firms that you were looking at was fairly new to regulation. They were new to finance in some way, but they had technologies that they were looking to develop innovation from. And a lot of it was from an industry that was looking for price exposure. They were looking for spot positions. How can I acquire the digital assets? So you naturally saw a lot more of exchange type activities, and some to a lighter extent on the broker dealers. But if you move and transition over time, what we've seen is certainly now more activities around, I have price exposure, can I actually safely store my assets? That's when custody came in as a very keen interest, independent custodians coming into the center, and also now some more sophisticated price exposure from derivative products, which is now what we're starting to see more bigger, bigger players who are seasoned, been in finance, understand regulation, very robust established technologies, and certainly they're looking for depth of market from an institutional perspective. The derivative products are more sophisticated. And naturally, we see the transition from that going next to be, how do I earn yield? I have the digital asset now, how am I going to now maximize the value that I can get from this? From a regulation perspective, what we've done is to continue calibrating our expectations for the desired outcome. On the one front is definitely through rules, but also in raising the bar on guidance. So if you think about just last week, we published IT risk management guidance that covers comprehensive aspects, digital assets included, on how you safely protect things like your cryptographic keys, which are very, very important if you're a custodian that an institution is going to expect to trust to hold these assets. But alongside that has also been internally improving the way we supervise the space. And that's relied quite extensively on SupTech. That's building internal custom tools that allow us to be able to have a better insight of the operations of the firms. A lot of this is actually blockchain native, so there's certainly there's a lot more of a public footprint that you can actually view and make sure that it corroborates with some of the representations that the firms are giving, but equally making sure that the firms themselves have those systems and controls that can allow them to put their hand up and say, yeah, that particular rule, this is how we're meeting it. And for any client that then asks them the question, they can also be very, very capable in showing that they're actually meeting those expectations from the regulator. So there has been a step approach in this, and as recently as just within this month, we've again shared a consultation paper on areas we see further enhancements in the digital asset space. On the how do you earn yield, things like staking are coming up as discussion items, yield farming, or more even extensively, what can custodians hold? Plus, of course, new virtual assets related business models. How can I lend against my collateral that I'm holding? And all of these become very interesting for the institutional player because they have a depth of market, trusted intermediaries. They're trying to reduce on that counterparty risk, but also asking the question, how can I take leverage? How can I take a margin on this? Which is new to the digital asset space, but obviously in the traditional finance space has been very established and is very much there. And it just requires more from a regulation perspective on how we approach this, because some of the traditional tools don't lend themselves quite well for digital asset native industries or businesses. And because they're digitally native, it also means certain things like being able to pull an API is actually a much easier conversation because they just have that from the get-go. Their business model is designed with those capabilities.
Yeah. You're making a really important point because what we see, of course, is that the supervisor and the central bank in terms of the infrastructure are learning with evolution in the market, and if you're doing it faster than others, you always have the edge. So even for supervisors, it's a critical piece to use technology to be able to monitor your market and supervise, but also keep on learning how things are working and when they cross wire in the wrong way, because there is obviously a lot of risk. And I do think as we're moving up with the operational resilience and cyber resilience piece, there will be other technologies that supervisors particularly can use to actually supervise how risky the landscape is. But just bringing it back for the last sort of 2.5 minutes, I just wanted to mention the term risk and trust. And what we do see in the old world, the problem is the paradigm of risk is bad. And I sit on various boards of actual financial market infrastructures and banks. And every time we talk about risk, it is never seen as an opportunity. And I do feel that in Abu Dhabi, the capital of capital, people are seeing the good side of risk and they're using technology to mitigate it in a proactive way, but they're enabling the market to grow. And that's what I find most exciting here. I think it's something, Peter, that the Europeans can learn from, definitely. But even thinking about the whole asset agnostic ecosystem, Paul, that we're in now, building an infrastructure and growing it with a platform on top to allow for asset agnostic operations is going to be really the potential, isn't it?
Absolutely, and this is how we see the vision at the central bank. again, when we're building all of these financial market infrastructure platforms, the idea is that we are, asset agnostic. And we want to ensure that, whatever, system or scheme we may be running, or the industry may be running, it works very seamless, and it can cut across different, assets, whether digital assets or non-digital assets, in a very seamless way. One thing we take very seriously is, as you mentioned, risk. But we think with the, all the innovation that we have today, with AI and Gen AI, we think you could easily mitigate lots of these risks. So we don't see, lots of regulators and our colleagues, they focus a lot on, risks and looking at the, maybe, the dark side, which is nothing wrong with it. We try to focus more on the bright side. We try to focus more on how do we use these technologies that we have available today to mitigate risks. And we've seen some really good examples in, regulators coming up with supervision technology platforms, SupTech platforms. This is something that we're also doing at the Central Bank of the UAE that will help us mitigate risks, especially when it comes to fraud, consumer protection. How do we ensure reconciliation happens? If it's a DLT or non-DLT, it happens instantaneous. There are lots of challenges when you bring, large-scale technologies like instant payment platform. And we've seen lots of issues, whether it's around fraud, whether it's around, consumer protection. But with the capabilities that AI bring, and some of the Gen AI, provides in today's world, we think that we can mitigate and help avoid lots of these risks.
Yeah, excellent. So suffice to say that we are now in a data economy, and I think the action is here in the UAE, in Abu Dhabi, in terms of the central bank and the infrastructure perspective on how you're creating this innovation platform, the regulator, how you supervise, how you develop the policy rules that work for a broader ecosystem, and keep on learning from the innovators all the time. Peter, we have to admit, in Europe, it's a little bit slower. We still have to change the mindset of the old banking world, but we're getting there. And I just want to say, what a fantastic panel. Thank you to the panelists. Abu Dhabi, capital of capital, you rock. Thank you.
Thank you.